your raise, let's say you got a raise this year, your raise was 3%. And companies base raises off of these numbers as well, off of the inflation expectations. So they say that your raise was 3%, but then we see inflation running 4 or 5%. Did you even gain anything? Or even if inflation is at the same 3% that your pay rate increase was, are you even gaining anything? Perhaps you're even losing. The era of the Fed Oracle is officially over. If you spent the last 5 years waiting for the Federal Reserve to tell you when to buy, when to sell, and what to expect next, you've been operating on a playbook that's currently being shredded in Washington. This week's FOMC meeting wasn't just another hold on interest rates. It was a regime change. Kevin Warsh has taken the podium and he's made one thing clear. The days of forward guidance, that crutch that markets use to build their entire risk-on mentality, are gone. Welcome back. Main Street meets Wall Street. I'm Marcus Dermott Sr. We're not here to guess. We're here to look at it. Today, we're going to do a deep dive into the 2026 economic landscape. We're going to play that clip that defines the new Kevin Warsh era, his first address, and then we're going to break down to see what it means for your money. We're living through this Hormuz paradox. We've seen it open, close. Now we're seeing bombs fly again, blockades. We've seen the price of crude spike. We've seen it come back down. We've watched fertilizers and food supply chains get squeezed in real time. This is not transitory noise. This is structural, and it's hitting the American consumer right at the kitchen table. So we're going to jump from speculation to strategy. We're going to stress test those things just to think about what we're having in our home. This record U.S. sovereign debt, price to perfection tech market in our stock economy, and the current massive shift is maybe showing some underlying fragility. We're going to start right off with Kevin Warsh's full speech. Sit back, listen to what he says and what he doesn't say. Pay attention to the dot plots and know this is a different era coming in. I'm not saying it's good. I'm not saying it's bad. This is the information we need, Main Street, to help Main Street meets Wall Street. We're going to jump into the Warsh video. It's the first week of Warsh's speech. SpaceX is at IPO's first full week of trading. Kevin Warsh didn't just change the post-meeting statement. He launched a quiet revolution inside the central bank. To fundamentally rebuild the Federal Reserve from first principles. Warsh announced 5 independent task forces. These aren't standard committees. They're a mixed group of internal Fed staffers and external experts tasked with tearing down and rebuilding how the Fed operates. Are they going to have strict deadlines to deliver a complete strategic framework by the end of 2026? That's the goal. But this isn't a slow transition. It's a corporate-style restructuring of the world's most powerful economic institution. Let's take a second just to think about some of the areas that Chairman Warsh introduced. Fed communications is one of the task force. So the first and most immediate goal is Fed communication. For years, the market hung on every syllable of Fed's forward guidance. Warsh wants that dead. This task force is reviewing whether to permanently scrap the famously quarterly dot plot, which Warsh did not participate in, and eliminate routine post-meeting press conferences entirely. The philosophy here is profound. Warsh believes that by telling the markets exactly what the Fed will do, the Fed accidentally blinds itself. If the Fed stops guiding the market prices will finally reflect true economic reality again, serving as an unmanipulated data feed back to the central bank. So he's pushing the onus from the bank to send a signal, and the bank is now receiving a signal from the market, I guess is a better way of saying that, right? He also pushes on how the Fed uses backwards looking data, lagging data. So that's one of the task force. Next, he's focusing on the Fed balance sheet. The Fed's multi-trillion-dollar balance sheet. Over the last 2 decades, the central bank became the world's largest buyer of bonds. The second task force is conducting an aggressive top-to-bottom audit of asset management. Because this study is locked into a year-long timeline running through late 2026, it sends a massive signal to Wall Street. Don't expect any sudden near-term changes to the Fed's bond portfolio, although Warsh has started making moves to reduce it. Any structural shifts are a long way away, giving the market a predictable, quiet runway while the deep work happens behind closed doors. Third task force, or another task force, tracks a flaw that has plagued the Fed for years: lagging data. The central bank has historically relied on backwards-looking macro indicators to make real-time policy choices. Warsh's data task force is reassuring the Fed's entire information pipeline. They're auditing whether traditional metrics are still accurately capturing the speed of modern economies, or if the Fed needs to build entirely new high-frequency data pipelines to avoid driving the economy looking strictly through the rearview mirror. AI productivity and inflation. So the last 2 task forces prepare the Fed for a radically different future. One focuses on productivity and jobs in the transformative era, and specifically built to study how artificial intelligence and automation are how artificial intelligence and automation are altering the labor market. Warsh recognizes that AI could massively spike productivity while shifting employment dramatically, throwing out old Fed models out the window. Meanwhile, Task Force 5 is reevaluating the inflation framework. It's examining whether the Fed's legacy tools are actually effective at maintaining absolute price stability, and in the new tech-driven era, ensuring the Fed isn't fighting tomorrow's inflation with yesterday's playbook. Another thing to note is that new Chairman Warsh only focused on one side. He's focused on price stability a lot, not so much on labor participation. He mentioned a lot or several times that his focus is on the left side of the decimal. When he says that means he's focused on that number 2, 3, 4, whatever the headline. I shouldn't say headline because that's a different type of inflation. But whatever the number is, whether it's headline or core inflation, whether it's 2, 3, or 4, not so much on the numbers after that decimal point, which people often should count as well. I mean, that's a big percentage if you take that whole percentage out. But he's also just showing his shift in the way the Fed is looking and the Fed is moving. So one thing about it, two things for sure. Kevin Warsh came in and put his stamp on this Fed. He put his name there. He put his initiatives there. Two things about it, though, is this is still a committee. So there are a lot of different groups and ideologies inside this Fed. The Fed is also elected. They're not elected, they're appointed, but they're appointed by officials who are elected by the people. It was interesting, all of the political campaigns that played in that video from Fox Business that were for a Democrat, Roy Cooper. They did target it right, though, because I was in North Carolina, so they targeted the right area. But it's interesting, there weren't any other videos. It was all from one side, and it was on a different network. So I don't know, but it's that time of year again where political ads are coming out. So the inflation target is a big thing that we should think about as well. Inflation hinges a lot where we are, where prices go, cost of living when it comes to that later, and the cost of living adjustment later in the year is based on PC, I believe, if I remember correctly, personal consumer expenditures index, that type of inflation. But the 2% target that he mentioned, and that may not be 2.0, it might be 2 point whatever, what he pointed to on the other side of the ledger. And you could see actually if the price of oil comes down with the war from where it was versus months ago, you could see an inflation target or an inflation number come out with one of these reports a few months out with a 2 at the front of it or a low 3. We've seen some hot 2s, but it's just the Fed has stated this goal for 5 years of 2% inflation. They really haven't met it. But Warsh said they were unanimous in their decisions on the board that they can reach that goal and that they wouldn't change the goal. That was one of the things that perhaps we didn't know if he would come in and change the goal, change the Fed target for where they were trying to reach, maybe raise it up to 3% with this increased productivity, this increased GDP expectations. This is from America. The world GDP, the International Monetary Fund lowered global GDP expectations down a little bit here recently, but there's a detox going on. So we'll see if this new productivity, we need wage growth to catch up to inflation. That's a big thing that's hurting consumers right now, is wage growth is not catching up or holding pace with the consumer. So what you see inside of that is a struggle to purchase. You see your purchasing power actually decreasing every day you see it going down. But we've seen prices at the pump come down here recently. We've seen prices at pump come down. We've seen some food prices come down. We've seen inflation. Inflation's sticky though. We saw a 6 handle last inflation print. That's a big number that can be scary when you're looking at, but that wasn't totally unexpected given that oil and gas prices when the war started, that data is just starting to feed through, were in the high 60s and they doubled pretty much. So you got to think about that when it plays into inflation. Inflation almost doubled. There are a lot of things that go into oil. You have fertilizer, that's a big thing, which plays into food, and it just plays all through the supply chain, the increased cost of transporting goods. And we saw that 6 handle on the producer price index. So we see that it's being passed on to the producers, the consumer. The CPI was lower, consumer price index. So that means it hasn't been passed on consumers yet as high. It'll be interesting to see what this recent reading comes up to say. Because inside of that, we'll see if more of this pricing pressure has been passed on to the consumer, or if the producer is still absorbing most of it, or if we just say some of this inflation is leaving at this point. I don't know. Inflation's sticky, and that's one of the things they're focusing on over there with Chairman Warsh is the inflation. We saw a struggle I'm sorry, it's not a struggle. We saw that employment was still strong, above expectations, employment and job growth with the last numbers that we saw come out. So inflation seems to be a sticking point for Chairman Warsh. Like I said, he didn't even really mention the other side of the dual mandate. A big thing that he always also mentioned, not always, but a big thing that he also mentioned was the fact that the Fed is probably going to reduce forward guidance. I mean, he definitely wants less Fed speak. But I don't know if he realizes, like, if he reduces forward guidance, and this is just thinking out loud, if he reduces forward guidance and the amount of time that the Fed speak, that the words that they do say will have far more impact on moving the markets. He can't restrict the governors from speaking. He can try to influence them to speak less, but they're all independent governors of their own banks. So, in their districts, so they can speak. It's just he's trying to reduce the level of communications, as I mentioned earlier, because he wants the markets to move on market structures and pricing, earnings, costs versus what the Fed is saying, where the Fed's chasing. The markets have been chasing 2% inflation targets and setting their expectation of 2% inflation targets. And the Fed clearly has been not able to reach that goal. Although it would be hard to say that Jerome Powell did not pull off a soft landing. It's left to be seen, but we'll see. He flew up into some bumpy turbulence when inflation was at 40-year highs, but we'll see how history plays out with that. Also notice that Jerome Powell's still on that board and still a voting member, if I remember correctly. So they're moving away from the dot plots. So those are just economic forecasts from each Fed governor. They put them on a chart, a little plot, dot on a plot chart. So Warsh wants to do away with that. All the other governors voted. I think there were 9 and 9. He did not vote. 9 whether to lower inflation or raise inflation in the future, where they saw inflation heading. He did not vote. He would have been the deciding vote. I don't think it would have changed anything. They all decided to keep inflation or keep rates paused. They weren't raising or hiking inflation. He said that in 6 weeks they'll have a lot more information, a lot more data. I guess he's getting these task force going. Some of the things that to note with the task force, he mentioned he was looking for strong minds, experts. He's looking for diverse opinions, people who can have, he kept mentioning family arguments, strong family disagreements. So he's looking for some consternation inside these areas but good consternation, good, healthy conflict and verbose discussions hopefully will come from this. And hopefully all this benefits the American people. This is Warsh's first meeting, so we have to give him the benefit of the doubt. I mean, President Trump spoke but President Trump has a lot going on with the war right now. We had the peace agreement that was signed, the memorandum, but bombs have started flying again since then, or missiles or something. They've started shooting again at each other over there. We've started engaging things. I think Strait of Hormuz has been blocked again. So we saw some traffic coming out of there. It'll be interesting to see where that leads with the economy and data going forward. And we'll see what Monday and the rest of the week looks like, but it could be a bumpy one going ahead, which is a thing that you should note also historically, and I digress a bit, but that the markets, and I've said this before, the markets will probably be choppy and volatile going up into the midterms, and this is historical, and then once you get to the midterms, we have a little clarity into who the elected officials are into the end of the year, even into the beginning of next year. We should see the markets explode up and back to the right. Hopefully too much damage has not been done until that time. I mean, we have to remember markets are all-time highs, but another thing to note is that when Chairman Warsh spoke on Wednesday, I think the market had the largest decrease ever after the first chairman's meeting ever. But like he said, he's not really watching what the market's doing in the first few 30 minutes, hours, or even days after he makes his speech. He understands. Another thing to know is that Fed chairmen are usually tested. So they're usually tested by the markets or some abnormal event. Chairman Powell, when he came in, that was right around when COVID hit, so that was one of his tests. I think if you go back to the 80s, we had the Wall Street crash, but that was all set up from running the economy hot, a lot of productivity, growth, and gains. That was also a K-shaped economy like we're seeing right now. So a lot of parallels to when the 80s took off to when the 2000 or the 90s to the 2000 boom took off, the dot-com boom. So there's a lot going on. Are we on a 17-year bull run that started at the end of the 2008 market crash? That's to be seen. There are people who think that this market is about to pop and the bubble's going to blow anytime, and there are people who think this thing can continue to grow until the end of the year or to the end of the decade. So you just have to be positioned, know where you're at. Don't jump out of the market right now or anything, because you would have missed a ton of gains if you jumped out of the market. You have to stay invested in the market. You just have to know if you want to be more risk on and if you want to have more exposure to stocks, or if you want to be a little bit safer, but you need some exposure to stocks because historically stocks are one of the few things that have beaten inflation, like price participation. So when I say like your cash is literally losing money or losing productivity, think about the example here where we're talking about inflation and inflation target, or people who are on fixed expenses from like COLA adjustment, cost of living adjustments that you get. We're set last year, I believe, in the threes, and then we saw inflation like the next print was much higher than that. So those people are losing already when inflation is higher than their cost of living adjustment. Or if your raise, let's say you got a raise this year, your raise was 3%. And companies base raises off of these numbers as well, off of the inflation expectations. So they say that your raise was 3%, but then we see inflation running 4 or 5%. Did you even gain anything? Or even if inflation is at the same 3% that your raise, your pay rate increase was, are you even gaining anything? Perhaps you're even losing once the taxes come in. But more money, more problems, as they say, right? But it's not the same way that we're thinking about. Inflation is huge in productivity, economic growth. You have to know where we're sitting at inflation. That's why we just sat here and watched 45 minutes of Kevin Warsh's video. I've watched every Fed speech since Powell took office. I enjoy watching them, listening to what they're saying, ciphering out some of the noise so that I can decipher what is actually being said here on Main Street from Wall Street or from the Treasury. This is up in DC, or I guess that's from the Federal Reserve, not the Treasury, but the Treasury as well. Let's jump into quickly talk about SpaceX for a second here. So SpaceX had their IPO. SpaceX's IPO was one of the largest, I think it was the largest in history, actually. But SpaceX's IPO, whether we're not going to jump into the valuations and whether you should buy or whether you shouldn't, actually have like a couple videos on that if you want to go back and check out on the channel and a podcast. I mean, where you see the interviews from the SpaceX people, you hear them lay out their thesis. I mean, several hours of it are available on the channel if you want to listen, if you want to hear my thoughts on that. And also, I was quoting Inside Business Insider speaking on SpaceX's IPO and its potential inside employees' retirement plans. With that being said, SpaceX's IPO, as we expected, was volatile. But it ended up for the week from its first price. I mean, its initial IPO price was 135, but it initially jumped right up to like 160s, 170s. And I believe last week it was up in the 200s, the low 200s, 220s, 230s maybe. But it came back down into the high hundreds, so $170, maybe somewhere in that range. But that's what you're going to see with SpaceX and companies like these, right? Like right now. So they're going to be volatile, extremely volatile. We have Anthropic and OpenAI coming out later this year, or OpenAI or later this year and beginning of next year. Several other IPOs are coming out. When you listen and you hear people think about IPOs, like I said before, David Snyder mentioned with the IPOs that 5 years later, they're usually down from your initial price where you buy them from. But that's because the way they're set up, IPOs. And this one's a little bit different. This isn't, once again, not an endorsement to buy SpaceX or to not buy SpaceX. That's your personal call. Some of my clients want SpaceX, some of my clients do not want SpaceX. If you are going to buy SpaceX, or my personal philosophy with these clients, I just let them know like this stock could go in half from where we're at right now, from where the initial price offering came out, and it could do it fast. Or it could go, one question, it could go to 50 or 250. Which number is it going to hit first, right? $50 or $250. Which stock price will it hit first? We'll see. It's kind of like those things with Bitcoin. Same thing. Like, will Bitcoin hit 50,000 first or 250,000 first? You just don't know. It's that volatile. And SpaceX is kind of that volatile as well. But SpaceX does have a lot of different components that they're bringing in. And I think eventually you'll have Tesla brought inside of SpaceX, one huge mega company. Because these market caps and valuations help Elon Musk reach his compensation package, which he set up. And they also help Elon Musk become the first trillionaire in history. The SpaceX IPO made a lot of people millionaires. And that's another example of like how IPOs work. So private credit people, if you're buying inside of a private credit entity or company like SpaceX, so their employees, for example, began working there and they were probably getting lower like physical compensation dollars salary wise, but they probably had a lot of stock options or IPO options for that SpaceX private before it went public. And once Elon Musk and his team went on and did their roadshow with the bankers, so I think Goldman Sachs and Morgan Stanley led that effort. Once they went on their road shows and they were doing the tours with the banks and the bankers, explaining their strategy, those individuals had an opportunity to sell some of their stock pre-IPO, or they could hold them to when they went public. But once they go public, they're gated. So, I mean, you can't sell them until a certain amount of time. Usually these IPOs can't go into indexes for at least a year. They have to be profitable. I'm speaking of the S&P 500. They have to be profitable. They have to have earnings. NASDAQ fast-tracked the allowance of SpaceX in there, but NASDAQ also launched the SpaceX IPO. So that's one of the things I said is going to be different with the SpaceX IPO, or that is different. The SpaceX stock will go inside of the NASDAQ 100 index sooner than most stocks go into indexes. So That'll actually be inside of people indexes. So that'll push the price up a little bit. You would imagine the cult following of Elon Musk, I think they had announced they were going to allocate up to 30% to retail investors, but they ended up allocating maybe 20%, 23, 24% to retail investors that had very small float, like 3 or 4%. So a lot, very small amount of stock that was available for people to actually purchase. And like I said, the stock price didn't go extremely crazy that first day. Like it went up, but it didn't. And to say like from 135 to 180 isn't extremely crazy, but we've seen stocks on those IPOs like double and triple, like just ridiculous numbers. And those things crash and destroy extremely hard. Not very long after that, we've seen it just here recently in history. And there's been a lot of markets for the IPO game. People really want to see IPOs again. We expect banks to benefit from IPOs. We expect individuals to gain from IPOs, but you also have to realize that people are hesitant with IPOs because the IPO has been looked at as a trap for retail investors. People assume that institutional investors, and rightly so, because I mean, this was a time and where only the institutions were really making money on IPOs. They were catching the money as soon as it started. They had these options that I was speaking about, like with some of these employees, they were buying up these stocks and then they would sell them. So the retail investor had more exposure to the SpaceX IPO. I was in one of the Benzinga, I was in a Benzinga show in the chat with him. Shout out to Benzinga Pro, which will help actually right now. If we have less Fed guidance, you can check out Benzinga Pro for some of their research and market data. I'll have a link for them. I'll leave it in the description for this video. And people were talking about the amount of from their pre-orders, like retail investors. So that was something different because usually it's hard to fill those orders. I mean, people were getting half positions, but like a billionaire investor, Ron Barron, who's been investing with Elon Musk for a long time, I think he put in for $1 billion and he reached his full allocation. He got the full $1 billion allocation. So, and that was at the IPO day. So certain people, they got their full allocations, but it was interesting to see that I thought more was available at the beginning than it would have been as far as like what people were requesting. Some people were requesting 100 shares and got 100 shares in there. Also inside the IPO, SpaceX set it up where you have to, well, not SpaceX, I'm sorry, certain custodians set it up. So like Fidelity or other custodians had it where you can't sell the stock within a certain amount of time. If you try to sell it within 2 weeks or a month or something, because they don't want you to flip it, then you'll get like a restriction, a 30-day restriction, 60-day restriction, and the time's arbitrary. I'm paraphrasing here, but so 30 days, 60-day, and then like I think after the second or third time, you may be restricted from ever participating in IPOs again, because that was one of the things we worry about, or that retail investors would take these IPOs and just try to flip them. Whereas I guess, quote unquote, air quotes for anyone listening, institutional investors tend to hold on to these positions longer. So when they're holding on to these positions longer, it gives the stock more time to find its footing and its balance, and it also gives more time if you ask retail investors or people who say IPOs are a fool's game, that gives more time for people to come in and be the last man without a cheer when the music stops playing. I don't know. We'll see. Once again, inside that, so you also have the allocation to the retail investors, which is different. Then you have Elon Musk and the cult personality and cult following that he has. So he's one of the original Tesla's, one of the original retail investors market. We saw a lot of people. So he has a built-in base of people who will buy stock, but not enough people to support a stock forever, right? Not enough people to support that stock at that level. But as the stock goes in the indexes, that will force institutions who own these indexes, these are going into pensions, these are going into hedge funds, people who they'll have to, they'll be including SpaceX, and then their fund managers. So I say fund manager, someone who creates their own portfolio of stocks and they sell them out to people. You invest in this and they'll show you my fund has performed versus the S&P or XYZ or whatever stock index. XYZ is not stock index. S&P, Dow Jones, Kashi, you probably won't compare it to Kashi. That's an international stock now. But any index you want to compare it to, and you pick individual positions and they build out portfolio. But if they're doing that to mirror the NASDAQ, if that's the portfolio that you've put into mirror, then you have to include some SpaceX stock in there. So people will be buying SpaceX stock if they have to fill it up. Another thing that happened earlier than usual were the options came out on SpaceX. So we saw a lot of volatility with the options, those calls, and puts were priced extremely high for options calls for people who've never bought options. Be careful if you do buy options. Options are tricky, man. Options are hard with timing. I'll tell you that. Be careful with options. All right. If you're going to buy options, you need to go do some research, like some deep research on options. You need to have a entry point and an exit point with options, because options will leave you with zero if you're not careful. Be careful with options. But the SpaceX options came out last week, so traders were trading them as well. So the speed, the fan base, the actual individual involved with SpaceX, all these things make SpaceX's IPO different. We also saw leading up to the SpaceX IPO that shift in crypto, the flush out from Bitcoin, but it's also a Bitcoin winner. So people don't know if it's just the cycle with Bitcoin or if it's also the timing. We saw some of the high flying tech stocks lose a lot of market capitalization. So a lot of money went out of them back into the stock market. We saw the stock market actually go down, have some rough sessions there with the Dow Jones here in the last few weeks, and the Nasdaq and S&P. It's been a couple dead cat bounces inside there where it looks like the market wants to pull higher, but we're still hovering around all-time highs. Watch for oil. I'm still inside the IPO, but I'm sorry, just gonna step out a little bit outside because we're, setting up just let people know what to watch for. Like, we saw the mechanics where oil prices were going down and stock prices were going up. That's good. That's how it's supposed to be like, right? If the stock movement was based on the war before, like, so when we saw in February, we saw stock prices drop. Initially, we saw oil prices go down. Then we saw a period where we saw oil prices going up and the stock market going up. That wasn't really, I don't know. That wasn't, we did have strong earnings. Earnings are what should be driving the stock market. One of the things that should be more influential on the stock market or stocks, or whether their actual earnings and where they're actually producing results, how they're taking this money. We've seen this apocalypse since then. We've seen a lot of companies say they're now sourcing out debt. So we can't say that's all the war or all Kevin Warsh or all IPOs that cause money to move out in the markets, but there were definitely people preparing to get their dry powder, quote unquote, cash ready to buy some of these IPOs. And they're still waiting on more IPOs to buy in the future. People also realize that this market is bumpy right now. So there will be opportunities to come in and buy the market. One thing that I want people to realize, and whether it's investor or trading, sometimes the best move is no move at all. Like, sometimes the best buy is not to buy or to sell. It's to hold tight with the position that you already have and just figure out where it's at. Figure out why it made that move. Figure out what happened inside that stock. So I want to take a second here. If you're listening, if you're watching, if you can get some value from this, share this with someone you love, someone who needs to hear this. We recently just sat down with a lot of great conversations. Brad Olson over at Benzinga, I've been sitting down in the chat. Well, I got some great ones coming out with Derek McKinley. Derek Kinley, he sold his financial plan firm for an 8-figure exit. We did the Broke series over there with the LinkedIn editor, John Tomasi. That's really great. With first we talked about sports, so we talked about the Knicks and Spurs. Shout out to the Knicks. Shout out to the Hurricanes down here in the Wall Street South. It's just great content. There's a lot of great content. If you don't know the tempo of this channel, is this your first time watching? I love to help Main Street meet Wall Street, but I can't do that alone. I need your help. I need you all to share this stuff, subscribe, like, engage with the content. If you leave a comment, I'll comment back. I'll reach back out to you. But this is a free pipeline for people they don't know where to start. They hear this jargon and they're confused by what these people are even talking about. We need information as such a powerful tool, such a powerful weapon. We need more of it spread out throughout all the people who aren't paying attention to these type of things, whether it's due to a lack of knowledge, a lack of time, or a lack of desire. Like, these things impact your wallet. At the end of the day, your standard of living, your cost of living, all these things are intertwined. So that's what I'm doing over here on Main Street meets Wall Street. I'm trying to help people have the ability to digest, evaluate, and make informed financial decisions. So hit the like button, subscribe. If you're listening on podcasts, give it a 5-star review. Just join the channel if you enjoy this content. Tuesdays are going to be, we're always dropping the podcast with the guest on there. That's Tuesdays, usually premiering in between the 9 and 10 p.m. hours somewhere on Tuesdays. And then Saturdays, we usually drop something as well. So it's something like this, a series where we're just speaking on what just happened in the world and in the markets. And also we'll probably start doing a pre-week setup. So help people set up for the week that's coming ahead. But that's IPOs. As I was saying, the SpaceX IPO is different. I think it set up a structure where now we will see other IPOs that are coming out adopt this structure from the SpaceX, where you have a certain amount. You have the price set where retail or more investors can access it. You have a certain allocation put out to retail, because Anthropic, OpenAI, these are also companies that are going to be highly pushed by retail investors as well. Another thing we saw in the markets this week, we saw the move back to some of the memory companies, but we saw a broadening of the stock market. But it was just a very volatile week inside of the market. As we've seen here recently, we're going to continue to see choppiness. We had the memorandum, the peace memorandum that was signed, but then yesterday they were supposed to meet up. So Friday they were supposed to meet up and officially sign it. That trip was called off or postponed. we'll see where that leads to. That is a very fluid and dynamic situation. But Main Street, we have to stay informed. We have to get these tools. We have to gain and understand some of the things that the world is presenting right now and how it impacts our money. Like I was speaking earlier, we were talking about how folks are important, how folks are placed. We were talking about Fed chairs. I was talking about Kevin Warsh. That's a result of our vote. So go out and vote, because that's one of the main powerful tools that you have. We didn't vote for Warsh, but we voted for or the world, however you want to look at it. We're not getting political here. The administration that's in office gets to make that decision based on the votes. And then the people inside of Congress, so you have the Senate and the House of Representatives, they actually have to confirm these people into these positions. So once again, impacts of our vote. So just remember that. We're sitting here with the two-track economy. You know, we got markets versus households. As we sit here, we see how can this S&P 500 trade at record levels, right? How is it trading at record levels when consumers are struggling at home? And it shows the divergence where we're at right now. In this K-shaped economy, like the personal savings rate is really low. I think like 2.5%, suggesting consumers tapped out. Or is it a sign of extreme confidence that we can spend money? I think affordability is really hitting people in pressures. Small businesses, you know, they're signaling that what are the small businesses telling us? There's been a low hire, low fire, but there's been steady job growth, you know, inside of our economy. And the wealth effect, you know, is the wealth effect continuing to carry this? Or stocks the reason that people are able to live with this higher cost of living? Because once again, like I said, stocks and higher inflation, who's going to win out in the long run? Historically, stocks have outperformed inflation in the long run. And then, well, the rates, what are we going to do with rates? Are rates going up, rates going higher? One thing to watch with rates, so you can listen to what the Fed chair is saying, as you should. I don't say listen to what he's saying as you should for particularly to agree with him or disagree with him. Saying listen to the words he's saying, but also watch what the actual bonds are doing, right? So watch what the bond rates are doing on the other side. Are they going up? And when I say bond rates, I mean U.S. Treasury rates, so like the 2-year, the 10-year, the 20-year. See what they're doing. Are they going up? Are they going down? If they're going up, chances are that means that they're not. If the bond rates are going up when the Fed chair said that they were looking at rates going down, which Warsh didn't say. Warsh didn't say he was lowering rates, which was also interesting. That means that the bond market expects rates to be higher, right? If they're going down, that means eventually the bond market expects rates to be lower. Bond market wants to play it pretty close. The spread, look at the spread from how much you're paying for these U.S. bonds versus if you go out and buy a corporate bond. That corporate bond should give you a higher coupon because you're taking more risk lending your money, because a bond is up. That's what you're doing. You're lending your money to someone and they're paying you an interest rate coupon back for, usually biannually. And with this coupon, and at the end of that term, you get your money back, plus whatever payments you made. The coupon is just a loan, whereas if you own a stock, you actually own part of the company, equity. You own it. It's a part of the company that you own. Sometimes they pay a dividend, not a coupon, but a dividend, so a percentage on their earnings. Sometimes they don't. Sometimes you're in there for the growth. But just something to remember when you're thinking that. And then another big thing, what is that Chairman Warsh mentioned that it's 2%. And that it's on the left side of the decimals where he's really focused on. So left side of decimal versus, you know, where we're at right now. It's going to be a big week coming up. It seems like every week is going to be a big week, just where we're going, just with the market, with the world, the war in Iran right now, that conflict and the Hormuz paradox. I mean, how is it going to affect your fuel costs? I noticed that fuel costs are coming down. I haven't checked them down. I need to check the fuel costs today because you can see it daily down here where I live. Like we can see it go up, we can see it go down. But will this spike in fuel costs from the last month create sticky inflation, you know, or that won't disappear even if these tankers move? They've slowed down as of right now. The traffic has slowed down. Are markets really like underestimating the second order effect of this conflict on global food and fertilizer logistics? The growing season. And then, you know, why is this geopolitical shock? Is it structurally different from the 2022 energy crisis when Ukraine and Russia began their war? Like, how do investors differentiate between a war-driven supply shock and a true recessionary trend in energy demand? Then you have the war, and this conflict picks back up over the weekend, which just shows that you have to stay in the market. You can't try to jump in and out of the market. You can't try to time the market. It's not saying you don't lock in some of your gains. You should lock in some of your gains. You need to trim some of your winners when you have the opportunity. Not every day, maybe quarterly, maybe biannually, maybe annually, whatever your horizon is. And it depends on when you retire or if you're retired as to how often you want to go in there and even rebalance anyway. but these are opportunities to reevaluate where your position is, why you're invested the way you are invested, what your actual investment themes are, what's your philosophy. Why am I invested in, and this is not a stock recommendation or a, this is just an arbitrary stock. Why am I invested in, let's say, ExxonMobil? Okay, yeah. The war started. I'll go out and buy a bunch of Exxon. Full disclosure, I've had clients in Exxon way before the war started. But say the war started and I didn't buy any more when the war started. But let's say the war started and you say, okay, I'm going to buy energy now because gas prices are going to go up. So you want to buy, you want to buy some Exxon to add to your portfolio. And now you think that the war is going to end, or you see oil prices coming down, you see stock price move. Is this a time for you to sell Exxon? I don't know. Did you buy Exxon solely because you wanted it for the war? If so, then maybe it is time for you to trim Exxon. But you also have to think about the time you hold these stocks. So a lot of people don't take that into account. And I'm going on a rant a little bit. I'm sorry. Like they'll trade and they'll make a huge gain in a stock. They'll make 100%, but they'll forget that, like, 40% of that's going to be taxed if you sell it quick. So you really only made 60%, which, don't get me wrong, that's a nice percentage, but you have to take that into your calculations. So whether you hold it over a year and a day, as they say, that turns into a long-term capital gain versus a short-term capital gain. And that drastically drops your tax rate that you pay on that sale that you have there. So I always like to jump into, and I don't mean jump into, I like to do research and study companies, but I always like to go into an investment or a trade with at least a 1-year horizon on anything that I'm investing in. And notice that I said investing because not trading, we're investing. If you're going to trade, make sure you got like some outside account that you can do it with a minute amount of money. Some people do have that trading itch, but be prepared for taxes. People don't think about taxes. I remember that was a big thing with the Bitcoin run that we had and the meme trade, the GameStop. People were underestimating the cost of taxes, and it was just people were upset. So I guess some big questions here are, what will be the results of this task force? How will the Fed moving away from forward guidance impact retail investors? Are they going to continue to guess now based on these press conferences, or are they going to really just start analyzing hard data with tools like Benzinga Pro? Or, how are retail investors or people who don't have access to these meetings that they have or backdoor channels going to invest? And this Warsh's stance that the Fed has less control over prices than previously before represented a pivot to a more handoff monetary regime. It seemed like Warsh wants the markets to churn and work for themselves and the Fed to play its role. It's interesting that he did not push for lowering rates. I think he sees where we're at. He sees we're at a point where you don't have a strong case right now for lowering rates at any cost. And the next move may have to be an actual rate hike. We'll see. Depends on how persistent this inflation is and how growth is going. If we continue growing this economy as high as predicted, is this current AI bubble still being fueled by what many have called, air quotes for those listening, circular financing, or are we seeing general capital expenditure returns? We've seen companies announce just as recently as last week that now they're going out into the debt markets. Companies with, some of the largest companies in the world, so companies with large amounts of free cash flow, they're going into debt to fund some of these AI build outs. Are we going to build data centers in space? I don't know. That's another space that's play. If they do, I heard, I think it was Peter Thiel maybe came out with the idea of putting data centers in water. Once again, I definitely ain't drinking water from the ocean, but think about that, man. But that's just something else I do, right? I guess all water comes from the ocean eventually, but think about the things that you want to put in the ocean. That's a whole nother thing. And Benzinga Pro, like I said, it could help you if you take a second and look and give you some of this new data, see what some of these signals may be, especially without these new channels. And there are companies like Micron and Dell. Are they now picks and shovel winners, or are they just the latest high frequency momentum memory play in the case of like Micron, or, Dell's another American champion? We saw Intel and Apple just announce something, or maybe the administration announced it. I don't even know if Intel and Apple announced it. We saw Intel price shoot up again. So what happens to free risk after the US dollar when the government borrower cost accelerates, or like non-linear, right? So if the amount that we're spending really exceeds our amount of debt, or if these interest rates don't come down, because that has a lot to do with how we finance the debt too. Is this current market rally that we've seen sustainable if the Treasury's most continuously issued record amount of debt, continues to cover this deficit? What are some of the risks of this fiscal dominance, where the Fed feels pressure to hold rates lower than inflation to monetize the debt? So that's what I'll say. Like, if we keep these rates lower, it's going to help them with paying off the debt, but there's just a lot to go inside of our debt right now. And if you want, I have a couple hours of video on debt as well. If you want to go check it out on the channel with Mr. James Callahan, who was a debt analyst for many years. We go deep into the debt, how at that time was like 36 trillion, how it was actually like $160 trillion serviceable debts. Those numbers are higher now. That was a couple months ago. But like I said, this is an outlet for anyone who wants to learn pretty much anything financial. We have something covered. We go from 50,000 feet to the basic building blocks on some of the videos as to, setting up emergency funds and which, you need to set up an emergency fund. That's one of the first things you need to do. But obviously you have to have a budget. You need to figure out your debt, figure out a method of paying off the debt. But emergency funds first, right? You got to pay yourself. You got to get that savings rate. Just several things into like stocks versus ETFs versus mutual funds. Never make a stock recommendations on this channel because everyone's portfolio is different, right? If you're listening to a channel or somewhere and they're just making a recommendation, go buy this, this, this. I mean, and that stock might go way up in the time that you're talking about in a short time, but they're probably not for the 80-year-old person listening to this or the person who's about to retire. Not the stocks that most people are talking about on the internet or whatever. Those are stocks that are going to be up and down like SpaceX, volatile stocks that you can't particularly have in your portfolio or you can't have an oversized position in your portfolio if you're about to retire. If you're a longer term investor, like I said, how does these volatile mid-cycle environmental changes, like how are you allocating that high beta, so high risk stock inside your portfolio? And then modern portfolio theory, I spoke about that a little bit with Benzinga's chief content officer, Brad Olson. And is it being replaced? Like, is the 60-40 being replaced? Modern portfolio theory focuses on a lot of things, correlations. It had a lot to do with so it was part of the reason why people invested internationally versus domestically, where you had that mix. But it's a lot of it about diversification, correlation, and how if you have the proper amount of diversification, correlation, and you reach out to a efficient frontier that you'll have the best performance that you have, your optimal performance. And then how can you perform a weekend stress test? These 3-day weekends are always, or recently have been interesting, right? So you see a lot of people making moves going into these weekends and you'll definitely see some moves coming out of them. And why is it important to track these institutional flows? And what the Fed is saying, I'm telling you, we need to pay attention, right? We need to pay attention. We got personal consumption numbers coming out. There's always data coming out, right? And once again, you can check out Benzinga Pro when the Fed drops this data or when there's something that comes out that people don't quite understand. There will be a link down in the description for it where you can just take a look and see some unusual options, activities. Be careful with options, institutional flows, and real-time news, probably before it hits the headlines. Those guys are on top of it. I will give them their credit, give them their flowers, as they say, to Brad and the team over at Benzinga. They're just really doing big things over there, and they're making great moves. We've been talking for a while, so we had Chairman Warsh come on, give his speech, and let him speak for a while, 40, 45 minutes of that. And I've just been kind of riffing and speaking on the IPOs and the Fed, inflation, jobs, just sitting here talking to you Main Street. For those of you listening, hit the like button, share this, subscribe. Also, anyone who wants to do budgeting, if you're struggling with your budget or personal budgeting, check out Monarch Money. I have an affiliate link for them. I can leave in the tools. They don't do any selling. There's no ads in Monarch Money. Monarch Money uses AI to help you as well. You can share it with people. You can share it with your spouse, whoever else you're budgeting with. You can share it with your financial advisor or financial planner, someone like myself. So yeah, there's just a lot going on right now in this world, and these are tools that can help you. And that's not to say that and with those tools, yeah, I guess I should say those are going to be affiliate links, so the Benzinga Pro and the Monarch Money. So if you do happen to use those, I can or may receive a commission if you use those links that I said, or a fee if you use those links that I said. I want to get that full disclosure, and those are tools I've definitely checked out and used myself. So get that out there so people know. We need to be informed. We need to make informed decisions. We need to know what we're looking at. We need to know what we're listening to. I've really heard a lot of people lately they're listening to all these gurus, all these people who are just saying all type of, it's ridiculous some of the things that you're hearing out here in the world today, as far as what people are saying. I hear, and what you have to know is that these people making these outrageous claims, no accountability really for them, other than if the SEC or FCC or someone like that came in and got them. But as far as from everyday people, there's no accountability. They're not licensed or insured or bonded to really make these So that's why you don't generally hear financial advisors, financial pros hop on video and hop on YouTube and say things like, "Go about this and you'll get a million gazillion." We're not going to say the word guarantee, really, rarely, because nothing's guaranteed. Few things are guaranteed, I should say. Death and taxes are guaranteed, but few things are guaranteed inside life. So please, you have to understand, and the difference is another few differences. I'm just making a plea for people who, and this is whether you're dealing with like mental health professionals, financial professionals, any type of professional you're dealing with. I've seen people charging, I don't even want to say the numbers, but just like ridiculous amount of monies for courses, and then they're offering basic stuff. They're offering stuff that you definitely can get on this channel right here for free. But anyway, they're offering all kind of, and not just my channel. Like I said, there are other channels, other people that you can listen to and watch where you can get this information. I don't want to say the same information because, it's a little bit different over here. Main Street meets Wall Street. We do a little bit different over here, but you can definitely go out and get great information. And also, folks, always remember, like, have different sources for information. It doesn't have to just be one person. It's fine. If the person you're talking to gets offended because you ask them a question or you ask them about some information, I mean, what? That's probably on them. That's probably more of a telling sign on them than it is on anyone or anything else. But yeah, so as licensed professionals, we have insurance, bonds, insurance. So if something was to go wrong, we mess something up, we're doing continuing education. So we're continuing to grow and learn. We have to take tests, the certifications to meet federal, state. We have to meet certain information requirements. So we have to have certain knowledge about things, right? Because like I said, anyone could have said, and this isn't taking shots at people, anyone could have said, go buy NVIDIA in 2023 and you would have made a lot of money if you would just held it a year or whatever. When it was trading, it was going through all-time highs, it was becoming an all-time, or it was becoming the most valuable company in the world. But it went down in those times too. What to do in those situations? What's really your risk tolerance? Are you really investing at a proper risk tolerance for your age, for what your long-term goals are? What's the tax consequences? What's the whole picture? And how much of this should you have, right? Everyone probably should have some NVIDIA, but guess what? Once again, that's a stock that's inside index, so you will have it. Once again, not stock recommendations, but how much of this particular stock should you have? Am I getting these stocks already inside of my employment plan? If I work in one of these big companies, I work for Microsoft, Apple, Lowe's, these are companies that are all around here in the Wall Street South. That's why I just said that's why I mentioned these companies, because I know a lot of people work out here and they offer stock and incentives to their employees. So you have to think about these things as well when it comes to, like I said, once again, with investing, are you investing? It's going to be over a year and a day. Like, and that's still short-term investing. We got investing, it's still short-term. Or is it a long-term hold? Am I buying this and I'm going to hold it, never sell it? Maybe I think that's what Ron Barron said about his SpaceX. He said he's never selling it. We'll see. Never is a big word. Never is a big word is guaranteed with financial professionals and in the world that I live in. But once again, so I've seen a lot of different things in this world. And that's not to say that people who are doing these things or saying these things aren't actually being effective and efficient. I don't know if you ever heard the book Think Rich and Grow, or Grow and Think Rich. That may be the name of it. They're actually two different books. One, Napoleon Hill wrote it, and he's questionable about whether the information he wrote about is true. He said he once spoke to Carnegie, maybe. I think it was Carnegie. One of the Gilded Age millionaires and people who were so rich back in the day that it was ridiculous. Like Elon Musk rich right now. But went back and he said this man wanted to write a book about his thoughts, how he got rich. Actually, Think Rich and Grow. I did that audio, listen to that audio. Think Rich and Grow. But it's very interesting. But it came out later. It's been questioned as to whether he actually even had those interviews. Actually, that's where they were even actually happened. The person he was interviewing, Carnegie, has written plenty of biographies himself. So people are like, Carnegie probably didn't need a biography. There's just a lot of different things that question whether or not Napoleon Hill's book actually was based on whether it was a nonfiction or whether it was kind of a fiction. But at the end of the day, his book has inspired so many people to go out and do things and grow and grow rich. Like, I think Tony Robbins has quoted him that some of these big people that you hear right now, some of these big inspirational speakers, it all ties back to Napoleon Hill. So whether he was grifting or not, his work got results, right? And I don't know if sometimes in there you're going to get bad results, sometimes you're going to get good results. So that's to say, like, someone like that. Or then if you even think about, like, let's say Richard Simmons. Richard Simmons came in, he was dancing. His message was health and fitness. I don't think Richard Simmons was a personal trainer, certified personal trainer or anything, but he went out, he got people to take action. Dave Ramsey. You look at Dave Ramsey, people, that's a really hot topic. People either like Dave Ramsey, they're against Dave Ramsey. Dave Ramsey has some interesting theories and some interesting topics, some interesting statements. Like he was saying, the stock market's 10% return historically. That's a little high. But Dave Ramsey gets people to take massive actions. He's helped millions of people start going down that financial path. For better or for worse. I don't even say for better or for worse, because the moves he helps people to make to begin, if you're just starting out, Dave Ramsey's going to help you starting out getting down the path. I can say that, like with the things he's going to tell you, he'll help you focus on budgeting and this. Like some of the extremes he goes to, like in my opinion, it works for some people, like paying off all your mortgage and all that debt. Like I don't know, get that some time, but definitely gets people focused. That envelope method, if you're just starting, for anyone who hasn't, where you separate, you take all your cash and you put your actual cash into envelopes, and that's what you get to spend for each bill. So if your power bill is $100, you put $100 in that envelope for power. You put $100 in leisure. You put $100 for savings, or whatever. And once you run out of that money for that allocation, then you either don't do what you have. So if you spend that $100 for entertainment before your next month or next pay period or whenever it is that you budgeted for, then you don't do any more entertainment, or you have to take it from somewhere else out of those envelopes and put it into that envelope so you can do it. But you have a finite amount in those envelopes, and you have to figure out how to make it work. And those type of mental exercises help people out. Like his Financial Peace University, I've never taken. I read one of his books. People seem to find value, and people make moves from what Dave Ramsey tells them. So that's just another example. So then we go into, and it's a community like, I don't know. I don't know if people can afford these programs that are out here now. And there's plenty of people on the internet bashing them and attacking them and saying whether they're good, whether they're bad. That's not what I'm saying, where these programs are good or bad. I'm saying they're helping people take action right now. A lot of people who have never taken action. And hopefully, once these people begin to take action, they begin to go deeper into their research. A good thing that you can do is never just look at one viewpoint for research. Always fact check it, trust but verify. Feel free to look at another person's information from what they're telling you, right? If they're telling you this and they're telling you, I heard a popular statement the other day on a show. I tuned in to watch someone else that I'd never seen it. It was one of these money podcasts or episodes. I'd never seen it. I heard people talk about it. So, and this channel has millions of subscribers. Tuned in to watch it, and I heard one of the hosts make a statement about Micron. He said Micron's capital, or Micron's Micron's market cap went from 500 billion to 1 trillion. And he said in 48 hours, fastest ever. It did have the fastest ever from 500 billion to 100 trillion. I meant from 500 billion to 1 trillion, but it was not 48 hours. And someone else on the show questioned. They said, "Oh, you sure it was 48 hours? It was 48 days, which is still extremely fast. Like that's fast, but it's nowhere as fast as 48 hours. And that is a material mistake that someone probably should correct it. No one did. But those are the type of things like no one's paying attention to, I guess. They just see the movement and see the price. Because if you were in that stock, Micron, I think with Micron was the stock. Like if you were in Micron at the end of March or in March when it got down to in the high threes, and now Micron's sitting at $1,100. Yeah, you were like, oh, I got, but once again, when you're getting out, when you're trimming, what's the taxes? Are you in this long term, short term? These are kind of things that you need to look back and figure out when you're investing and when you're working with people. So some of these courses that people are offering, just I don't know, they're interesting. But I do love the fact that people are having conversations, people are learning different things, learning different topics. Just go back and research what you're hearing, especially if something sounds like extravagant. If something sounds extremely extravagant, you need to go back and check back on that. Let's go back and look and see like what we're really doing, like what's really happening here, what are we really talking about. So I'm trying to think of another example with people who get results, but I don't know. You have to just look and see who you're listening to and check. Make sure these people know what they're talking about. Are they experts on the subject? What makes them an expert on the subject? Did they just happen to buy some Bitcoin at 5,000 and it went to 100,000? Did they sell it? They still have it? No. What are you doing right now? Because another thing is a lot of these folks don't show you their investments. They don't show when they go up or when they go down. They may make a trade. They may hedge the trade where part of the trade, they may make the same trade, a call or option trade. So a call bullish meaning they think the stock's going to go up, and a put, which is bearish, meaning they think the stock's going to go down. They may make the same trade for the same amount on both sides, straddled. So if it goes up, it looks like they would make a lot of money that way. But if it goes down, but if it goes up and they got the same bet that it goes down, they lose money on the other side, and they just show you one side of the trade. So it's just like something that's a whole lot. So like total returns, watch for these type of things. And then just be careful in general, Main Street. Like I said, this is an outlet. Hopefully people can sit back, take in different information, learn about what's happening and what's going on in the world. We have coming up this week on the podcast, we have Derek Kenny's episode coming out is great for anyone who wants to learn how to speak about what you do, how to market yourself. He tells a great story about how he got involved in local schools and how it really grew his business. Like I said, Derek has sold his business. He sold his business for 8 figures. So I think he knows what he's talking about. He wrote a book. He's out doing his book tour right now. We spoke with Brad Olson from Bazinga, Chief Content Officer. So Brad's great. It was a great conversation. Check that one out. So all this is on the YouTube channel and the podcast. We have some live sessions coming up with Mr. Stephen Davenport and Samuel Brink. We're bringing Samuel back. Me and Samuel want to sit down and chop it up from Business Insider. So there's just a lot coming up, not to mention some of the great podcast things that are coming up. We got the crypto stuff coming up soon. The other side of the bullish case. We had a lot of crypto bears. Me and Clem Miller went down that crypto hole where he made the bear case why Bitcoin is a fraud in his opinion. So I want to bring different opinions. I want to bring people on here who you get the facts from their side, this side. You can go check them out. You can go check out and do your own research. I'm not going to tell you to go buy this stock or not buy this stock. I can tell you if we ever talk about a stock or a sector, why this stock or this sector has the pros and the cons, So just another great lot of stuff going on here. If you can't find the plug, just like with the Wall Street South Journal, that's up almost to 1,400 subscribers. We just launched that in February. And in the initial edition of that, I said, couldn't find a table, so I built my own table. That was the first part of the table. And guess what? The table was getting big. Everyone, there's room at this table here. We're letting you at the table. If not, we're going to show you how to build your own table. Couldn't get plugged in the proper way, so we're building an outlet. This channel is the outlet for Main Street meets Wall Street. Like if you want to learn information without all the jargon, we have the fancy jargon. Like I said, that's usually going to be probably a Tuesday episode. We'll give you some of that. But on Saturdays, we pull it back a little bit more. Check out the hair. You also like the hair pulled back, just a little bit laid back. Just laid back. We're still giving valuable information, practical tools, and steps that you can take and make every day. We got a lot of great information, a lot of great content coming out for everyone. Like I said, Main Street Meets Wall Street podcast is on fire for those who haven't seen it. Just a lot of big things coming out. I hope people take the time to really check it out and see how we're helping Main Street meet Wall Street. Also, just to recap, in this video, we've talked about Kevin Warsh and his new moves, how it's going to affect and impact. We let you hear it from his own mouth. Warsh speaks. And then we also spoke about, IPOs, mainly the SpaceX IPO. We dug deeper into that one. And then just what we're looking for this week. There's a lot of consternation moving forward. We don't know where interest rates will be, where the war will be. Well, interest rates are holding steady. So we know where they're at until the next 6 weeks when the meeting happens again. I guess 5.5 weeks now. But we've covered a lot of ground because there's a lot of things happening in the market. You found some value in this. Hit subscribe, hit like, share this with someone. This is the epitome of Main Street Heart meets Wall Street Smarts. That's what we're trying to do here. We really cover the 5 task forces for the Fed. So communication, that balance sheet audit, economic data sources, so those models, AI and productivity framework, and then trying to reach that inflation target is the two really feasible. They all were committed to reaching that 2% inflation target as they have been. So it's good to see uniformity inside of that group, at least on one subject. But you do need a little pushback both ways to actually get your best result. You don't want everyone all agreeing with the chair, everyone all disagreeing with the chair. We need some lively conversations from both sides of the table, and we need people to articulate and research and evaluate and deliver to the American people the best result for price stability and full employment. I know Chairman Warsh didn't really mention full employment, but that's what's in the amendment that created the Fed. That's part of their dual mandate. So yeah, when it was created. So Main Street Heart, Wall Street Smarts, hit subscribe, hit like, share this content with someone else, someone who needs to hear it, someone who wants to hear it, someone you love, someone you care about, or someone who's just asked these questions out loud. What does this stuff mean? What are these people talking about? Why do I care about interest rates? These are the questions that not only this outlet and this channel will help you find, but you'll also get it with unfiltered, no political biases here. Like I said, that video showed a lot of political ads, but that's just because it's that time of year. Those ads are for me. It's that time of year. So remember to vote. I'm not going to tell you who to vote for. Just vote. Do research before you vote too. Don't just go blindly vote. That's silly. But Main Street Heart meets Wall Street Smarts. Thanks for tuning in. Spend some time with me. Share this with someone. Hit subscribe. We'll see you next time.